Oil steadies amid easing geopolitical risks. China demand concerns weigh. Arunima Kumar August 20, 20246, 30 p.m. GMT +7 updated an hour ago. An aerial view shows oil tanks of Transneft oil pipeline operator at the crude oil terminal Kosmino on the shore of Nakhodka Bay near the port city of Nakhodka, Russia June 13, 2022. Picture taken with a drone. Reuters. Tatiana Meal file photo purchase licensing rights August 20. Reuters. Oil prices steadied on Tuesday after falling for 2 straight sessions as Israel accepting a proposal to tackle disagreements blocking a ceasefire deal in Gaza eased supply concerns, while China's economic weakness continued to weigh on demand outlook. Brent crude edged 19 cents higher, or 0.24%, at $77.85 per barrel as of 1036 GMT. The more actively traded second-month WTI contract was last up 19 cents or 0.26% at $73.85 a barrel. Advertisement. Scroll to continue. On the one hand, the thinner liquidity in the oil market at present. On the other hand, some of the comments from State Secretary Blinken on a possible Gaza ceasefire deal, triggering an unwinding of some oil price spike hedge positions. UBS analyst Giovanni Stornovo told Reuters. U.S. Secretary of State Anthony Blinken said on Monday that Israeli Prime Minister Benjamin Netanyahu had accepted a bridging proposal presented by Washington to tackle disagreements blocking a ceasefire deal in Gaza, and urged Hamas to do the same. Advertisement. Scroll to continue. Brent had fallen about 2.5% on Monday, while WTI eased 3%. A ceasefire deal in Gaza now seems more likely than not, which saw market participants pricing out the risks of geopolitical tensions on oil supplies disruption, said Yip Jun-rong, market strategist at IG. In China, worries about economic problems weighed on oil prices after a dismal second quarter. The world's second-largest economy lost further momentum in July as new home prices fell at their fastest pace in 9 years. Industrial output slowed, export and investment growth dipped and unemployment rose. The main culprit is China, whose economic struggles are mirrored in falling product exports figures, sluggish refinery runs and waning thirst for foreign crude oil. Tamas Varga, an analyst at oil broker PVM, said. On the supply side, production at Libya's Sheraa oil field has risen to about 85,000 barrels per day in a move aimed at supplying the Zoya oil refinery. Libya's National Oil Corporation, NOC, had declared force majeure on oil exports from the field on August 7 after a blockade by protesters hit production at the 300,000 barrels per day field. In the U.S., crude stockpiles were expected to have fallen by 2.9 million barrels last week, a preliminary Reuters poll showed on Monday. Meanwhile, focus remained on the U.S. Federal Reserve's monetary policy path and clues about OPEC Plus strategy, with members due to start unwinding one layer of output cuts in the next quarter. Get a look at the day ahead in U.S. and global markets with the Morning Bid U.S. newsletter. Sign up here. Reporting by Arunima Kumar in Bengaluru, Emily Chow in Singapore and Erithy Somasekha in Houston. Editing by Sherry Jacob Phillips, Jason Neely and Shaunak Das Gupta. Our standards, the Thomson Reuters Trust Principles. Purchase licensing rights.